the industry in under pressure, but what seemed to really knock you when it came to those earnings was your Australia operation.
That's correct. Normally a contributor to the bottom line. 11% turnover of the company, but unfortunately making a loss for the 6 months.
What are you planning to do with this? Because it does seem as though there were quite a few factors that fit into that number when it came to just on the operational side. And one of the things that was said in the report was them not meeting what the market wanted. What are you planning to do to turn that around?
It's more than a plan. We've actually implemented already in terms of separating our product development department and bringing them more in alignment with the sales and marketing guys, and splitting that role into two roles, one on the manufacturing side and one on the sales and marketing side. So before, the manufacturing guys were tending to dominate the product development, and it needs to be more customer driven.
Now, with this, it says that this particular division of your business, the only volume tile manufacturer in Australia, having that to be quite a positive in the market that you're operating in, though, and still struggling to meet that demand. Where's the disconnect?
I think a couple of issues. The one is obviously the strengthening of the Australian dollar has made it easier for customers to import at really aggressive and competitive pricing. And then the other one is in terms of it's a case of the tail wagging the dog. When you run a manufacturing operation, you've got to take cognizance of what the market is telling you. So if you focus totally internally, you lose very quickly you lose contact in terms of where you should be driving your new product developments. And we've lost contact. We've lost that contact.
Let's talk a little bit about that import factor, because it does seem we were interviewing another tile manufacturer earlier on in the year, and they said one of the things they saw with their customers is this increased interest in imported goods and how they were putting a lot of effort into that. And that is also showing in your reports that you're seeing that interest from the South African market, that they're wanting more imported goods and you wanting to be able to produce something that would be able to match that.
There's no doubt. The South African consumer and the South African market is becoming more sophisticated. It's looking for more variability, more and different effects in terms of furnishing their home, and hence they're looking for new products, new ideas, new concepts, new fashions to come through. So we've had to invest back into the factories to be able to deliver those kind of new innovations.
Let's talk a little bit about that, because it seems as though pricing a very, very huge factor in this business, and it's almost as though the competition, this is where the competition really is who's got the lowest price. Taking that into consideration, are you able then to be able to compete with the imports that are coming in on a price level?
Well, there's no doubt to be able to compete. I think the question is at what margin you're competitive. So for the last 6 months, where we've priced in a regime of a fairly strong rand, although it did weaken towards the end of the period, our prices were already locked in. We were able to compete, but obviously there was a cost in terms of margin, and that really is the factor. We can compete. The question is the level of profitability. We're still a profitable organisation. We're still generating good cash back into the balance sheet, but the margin has had to be cut in order for us to keep our capacity utilisation at high levels.
Your balance sheet is looking strong. Your cash position quite good in terms of liquidity. But talk to us a little bit about what you intend to do in terms of growth plans, because you did have plans to extend operations here in South Africa, build a new plant, and that seems to be shelved for now.
Not shelved, slightly delayed. We need to ensure that we have 20 to 30 years of clay reserves before we make a major investment. We're talking investment to the tune of 350 to 400 million rand. We are of the opinion we'd rather ensure we have the clay reserves locked in other words, we own them before we make that kind of investment. We're talking a delay here possibly of 6 to 8 months, and then we'll be up and then we'll get the project on the go.
Well, let's just talk a little bit about what's happening in the rest of Africa. Australia gave you very disappointing numbers, but then here you had export sales increase almost 16% to 95.4 million rand, and this is growth in other parts of the African continent, in particular Kenya, Mozambique, Namibia, Zambia and Zimbabwe. What are the opportunities that you're seeing there? Still
massive growth opportunities. As the dollarization in Zimbabwe has had a major impact on the man in the street there, and we're seeing the ability to purchase and the need to renovate and rehabilitate residences in that area. Zambia, the growth in the economy is there mainly because of commodities, but again, we're seeing massive growth in Lusaka, and as these major mining projects run out through Africa, we see an opportunity in the residential market for us to follow through. So a prime example right now is TET in Mozambique, where we've just signed on some customers and we're seeing growth in that area.
Let's talk a little bit about here, coming back to what's happening in South Africa. Where do you see the growth coming from? Because one of the things you were saying is we can probably, for now, you know, with what's happening with the new buildings, that not very robust, but where you are seeing some relatively steady performance is from the renovations part of your business. But then it's also looking at the overall industry in South Africa, this particular industry, under a lot of pressure, and it seems as though that's going to continue for a while. So what are you planning to do?
There's no doubt that we're seeing, in terms of demand, a sustained flat demand for the coming calendar year. I don't think that's in doubt. But where there are opportunities is what we're seeing is what we all call the emerging market is putting more and more money back into their own homes. So the South African dream of improving your residence is still there, and we must supply the products that meet that dream. So the plan really is to keep on driving innovation, keep driving the fashion, and improve the distribution of our product into the local market.
If you were to probably give us a forecast of what you expect your next numbers to look like, what do you think that's going to be?
I would think an improvement on this 6 months. But possibly a little bit down on the previous 6 months, because we had some contribution for Australia for the same period last year. I'm talking the second half of the year. So we will be down on the second half, but not to the percentage we've seen in the 6 months.
Thank you.